Today marks a pivotal moment for the American economy. In a highly anticipated announcement, President Trump has unveiled a comprehensive plan for major tax cuts designed to bring significant relief to U.S. citizens and reshape the economic landscape. As we delve into this landmark policy, we begin by understanding its profound significance and what it means for you and the broader economy. This announcement comes at a time when economic growth is a top priority, aiming to provide more disposable income for individuals and stimulate business investments. It's positioned as a catalyst for enhancing prosperity and driving future growth. While details will unfold in the coming segments, it's crucial to grasp the immediate impact of this announcement. These tax cuts represent a substantial shift in government policy, seeking to empower citizens and invigorate the economic engines of our country. Join us as we explore how these changes are expected to influence various aspects of American life, from individual tax burdens to corporate growth strategies. We'll examine expert analyses, government perspectives, and public reactions, ensuring you are informed and prepared for what lies ahead. Stay tuned as we break down the specifics of these tax cuts, providing you with a clear understanding of how they will affect your finances and future opportunities. This is just the beginning of our in-depth analysis, guiding you through the nuances of this transformative policy change. Let's delve into the specifics of these tax cuts and what they entail for the average citizen. President Trump has unveiled an ambitious tax policy aimed at reshaping the economic landscape of the United States. At the heart of this announcement is a series of tax cuts designed to benefit working families and stimulate economic growth. These cuts target various income brackets, aiming to reduce the tax burden on middle-income earners while also providing incentives for businesses to invest and expand. The policy outlines a reduction in corporate tax rates, which is anticipated to boost job creation and increase wages across the board. Additionally, individual tax rates will see adjustments intended to increase take-home pay for many American households. By simplifying the tax code, the administration hopes to make filing taxes less complicated and more transparent for citizens. Key components of this policy include an increase in the standard deduction, allowing taxpayers to deduct a larger portion of their income before calculating taxes owed. This change is expected to significantly benefit low to middle-income families, offering them more financial flexibility. Another significant aspect is the expansion of child tax credits, which aims to support families with children by providing additional relief during tax season. This move is part of a broader strategy to alleviate financial pressure on families and encourage spending, thereby driving economic growth. As we unpack these elements, it's crucial to consider how these changes will play out in practice and what they mean for you personally. Stay tuned as we explore expert opinions and potential impacts in the coming segments. As we continue our analysis of the economic implications of President Trump's major tax cuts, it's crucial to understand their potential impact on our nation's economy. These cuts are expected to have far-reaching effects, influencing everything from consumer spending to business investments. But what does this really mean for our economic landscape? In the short term, these cuts could inject new energy into the economy by increasing disposable income for individuals and encouraging businesses to invest and expand. This might lead to job creation, higher wages, and a boost in consumer confidence. However, the long-term effects are less certain and have sparked considerable debate among economists and policymakers. Proponents argue that reducing taxes could stimulate growth by allowing more capital to flow through the economy, potentially leading to a more robust environment with increased innovation and productivity. Critics, however, warn of possible challenges such as increased national debt and budget deficits, which could strain public services and infrastructure. It's a delicate balance, and the ultimate outcome will depend on a range of factors, including how these changes are implemented and how businesses and consumers respond. As we analyze these economic implications, it's important to consider both the opportunities for growth and the potential hurdles that may arise. In our next segment, we will delve into expert opinions to gain deeper insights into these tax cuts. we'll explore differing perspectives from leading economists on what these changes could mean for the future of our economy. Stay tuned as we uncover more about how these tax cuts could shape our financial future. As we dive deeper into the implications of these monumental tax cuts, it's crucial to hear from those who understand the intricacies of our economy best. We've reached out to a diverse group of economists to gain a well-rounded perspective on what these changes might mean for our financial landscape. From the outset, opinions are varied. Some experts argue that these cuts could act as a catalyst for economic growth, potentially revitalizing sectors that have struggled in recent years. They suggest that the injection of capital back into the economy could spur innovation and job creation, providing a much-needed boost. However, not all economists share this optimistic view. Others caution that such significant tax reductions could lead to increased deficits and potentially place a heavier burden on future generations. They emphasize the need for a balanced approach, ensuring that while immediate relief is provided, long-term sustainability isn't compromised. These insights provide a comprehensive look at the potential trajectories our economy could take. Each perspective adds depth to our understanding, highlighting both opportunities and challenges. As we consider these expert analyses, it's clear that the conversation around these tax cuts is far from straightforward. Next, we'll explore the government's rationale behind these decisions and what they anticipate as the outcomes of this policy shift. Stay with us as we continue to unpack the layers of this pivotal economic quanks. In a bold move, the government has outlined several reasons for implementing these major tax cuts, focusing on stimulating economic growth and increasing disposable income for citizens. They argue that by reducing taxes, individuals and businesses alike will have more resources to invest back into the economy, potentially spurring job creation and innovation. The government believes this policy will lead to a more vibrant market environment, encouraging entrepreneurship and increasing competitiveness on a global scale. One of the primary rationales behind these cuts is to alleviate the financial burden on middle-class families, aiming to enhance their purchasing power and ultimately drive consumer spending. By doing so, the government expects a ripple effect that could lead to heightened economic activity across various sectors. Moreover, these tax cuts are designed to attract and retain businesses within the United States, fostering an environment where companies can thrive without the pressure of high tax obligations. The government anticipates this will not only create new job opportunities, but also solidify the nation's position as a leading economic powerhouse. Critics, however, question whether these expected outcomes will materialize as planned. Nonetheless, the government's perspective is clear. They view these tax cuts as a strategic move to bolster the economy and ensure long-term prosperity. As we delve deeper into this policy, it's crucial to consider how these changes might directly impact you. In the next segment, we will explore what these tax cuts mean for everyday citizens and how they might alter your financial landscape. As we delve deeper into the implications of these major tax cuts, it's crucial to understand their direct impact on you, the citizens of the United States. What do these changes mean for your daily life? Simply put, they could redefine your financial landscape in significant ways. The promise of reduced tax obligations brings potential relief for many, but it's important to comprehend the broader picture. For some, these cuts may lead to more disposable income, allowing for increased savings or spending. But for others, shifts in tax brackets and deductions could alter what you owe at the end of the year. It's essential to grasp how these adjustments will affect your personal finances. Furthermore, these changes are designed with the aim of stimulating economic growth, though the outcomes can vary widely depending on individual circumstances. Are you a middle-income earner? Or perhaps a small business owner? Each group's experience with these cuts might differ, underscoring the need for careful financial planning and advice. The government's intention is clear: to fuel economic activity by putting more money back into your pockets. However, the reality of its impact will unfold over time as citizens adapt to new tax structures and obligations. So what steps should you take? Stay informed, seek advice from financial experts, and prepare for any adjustments that might arise. By understanding the nuances of these tax cuts, you can better navigate the changes and make informed decisions for your future. To better understand these tax cuts, let's turn back the pages of history. We've seen similar economic maneuvers before, each with its own set of promises and pitfalls. Remember the tax cuts of the 1980s? They aimed to stimulate growth by putting more money into the pockets of citizens and businesses. The results were mixed, sparking debates that still resonate today. Fast forward to the early 2000s, and we witnessed another round of cuts intended to bolster a struggling economy. Again, the outcomes were varied, teaching us valuable lessons about economic policy and fiscal responsibility. By revisiting these past events, we can better assess the potential impact of the current tax cuts. History has shown us that while tax reductions can lead to short-term boosts in spending and confidence, they also raise questions about long-term economic sustainability and income inequality. The key takeaway from these historical comparisons is the importance of balance and foresight in policymaking. As we navigate this new chapter, it's crucial to learn from these precedents. They remind us that while tax policies can be powerful tools for change, they must be crafted with careful consideration of their broader implications. Understanding the lessons from history will help us gauge the effectiveness of today's decisions. In our next segment, we'll dive into how the public is reacting to this announcement. The public response to Trump's tax cuts has been a tapestry of opinions, weaving together support, skepticism, and everything in between. Across the nation, voices rise in dialogue, each echoing a unique perspective on this significant economic shift. On social media platforms, hashtags related to the tax cuts trend, capturing the attention of millions. Some citizens herald the announcement as a necessary step towards economic revitalization, cheering for anticipated growth and prosperity. These supporters see the tax cuts as a chance to bolster businesses and stimulate job creation, hoping for a ripple effect that benefits all. Conversely, others voice concerns about potential pitfalls. Critics question the long-term impacts on public services and the national deficit. They caution that immediate gains may overshadow future challenges, urging a more cautious approach. Discussions unfold in town halls and online forums. Even as opinions diverge, a common thread unites many: the desire for transparent communication from policymakers. People yearn to understand how these changes will directly affect their lives, families, and communities. As more details emerge, the public remains engaged, eager to see how theory translates into reality. While opinions vary, one thing is clear: this announcement has sparked significant public interest and dialogue. As we move forward, we will continue to track these conversations, ensuring that diverse voices are heard. Next, we'll explore projections for how these tax cuts might shape future economic landscapes, offering insights into what lies ahead for our nation. As we look to the future, these tax cuts could become pivotal in shaping forthcoming economic policies. The projections indicate a landscape ripe with possibilities, poised to redefine the financial framework for years to come. Economists forecast that these changes may spark long-term growth, potentially enhancing the nation's economic resilience. However, this optimism is not without its challenges. The road ahead involves navigating complex policy shifts that could either bolster or strain government resources. Future policies might be heavily influenced by the outcomes of these tax cuts, setting precedents for fiscal strategies that align with evolving economic landscapes. As we project forward, it's crucial to consider how these financial adjustments might affect not only the national economy, but also global markets. Potential ripple effects could manifest in trade relations and international economic standings, making it imperative to monitor these developments closely. Amid these projections, stakeholders from various sectors are already contemplating adaptive strategies to align with the anticipated changes. Businesses might need to recalibrate their operations, while individuals could see shifts in their financial planning. The implications of these policies will extend into everyday life, influencing investment opportunities and personal finances alike. In this evolving scenario, staying informed and adaptable will be key. As the landscape of economic policies continues to unfold, understanding these future implications will empower citizens to navigate the complexities ahead. As we draw this analysis to a close, we reflect on the journey these tax cuts have taken us through. We've explored the details of President Trump's announcement and delved deep into the components of this significant policy shift. Throughout this video, we've examined the government's rationale and anticipated outcomes, understanding how these cuts might directly affect you, the citizens of the USA. We've also placed these changes within a historical context, offering lessons from the past to guide our expectations for the future. The public's response has been diverse, reflecting a spectrum of opinions across social media and beyond. Looking forward, the long-term implications of these tax cuts could set the stage for future economic policies and growth opportunities. In conclusion, while the road ahead may present challenges, it also offers opportunities for growth and prosperity. By staying informed and involved, we can navigate these changes with confidence. Thank you for joining us on this insightful journey.